It is worth noting that we are still up about 50% from before the ETF got approved. So we kind of got this repricing. We've gone sideways for the summer. I do expect that there will still be kind of a bull market.
I think we'll be, over the next 6 months, I think we'll be over 100,000 in Bitcoin and probably over around 5,000 in ETH as well. I mean, I think there's a big bull rush coming.
At about 56K right now, and it's down 12% in the last 6 months. In March, when Bitcoin was at 73K, the number of daily active addresses was 1.2 million. That has since dropped about 30%. What do you make of this data, and are you more or less optimistic when you hear it?
If you understand Bitcoin, you get excited when the price goes down because you can accumulate more at a lower price. The other thing is that people who hold Bitcoin are active users of Bitcoin. It just doesn't show up in the data. Part of Bitcoin's story is that it's a store of value. So if you're storing your value, you're using the product. You're an active user. You're a daily active user. And so, yes, people do look at things like transaction volumes and activity as a sign. And then when price goes up, of course, people are trading, they're transacting, they're moving stuff around. So you would expect price goes up, transaction volume goes up, price goes down, transaction volume goes down.
In this video, Anthony Pompliano breaks down the real reasons behind Bitcoin's recent crash. Over the past few weeks, Bitcoin has taken a hit, and just recently, over $1 trillion was wiped out of the stock markets in the US and Japan, with the Nasdaq and Nikkei dropping by 8 to 9%. The catalyst? A massive move by the Department of Justice, DOJ, who subpoenaed NVIDIA over antitrust violations. For the first time, the DOJ formally accused NVIDIA of anti-competitive practices, a criminal offense in the US. As a result, NVIDIA's stock tanked, losing a staggering $280 billion in a single day, the largest drop in history. With NVIDIA dominating 90% of the AI chip market, the DOJ sees this as monopolistic behavior. This DOJ action sent shockwaves through the markets, especially since many Japanese carry trade funds are tied to the Nasdaq and Nikkei. The fear spread, driving down markets further. Anthony also dives into other causes behind this market turbulence and offers advice on how investors can position themselves to navigate these uncertain times. As we bring you more clips from the interview, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you, and enjoy the video.
But the unique thing is, for store of value, a holder is an active user. And so there are hundreds of millions of active users around the world. We just don't think of it that way because it doesn't show up in the data in a way that if you're looking at a mobile app or something like that. There's no obvious catalyst in the next, through the end of the year, outside of the macro environment. So the macro environment, if they cut interest rates, there's, things around the election there that could potentially happen. Maybe a potential catalyst, although it isn't guaranteed to happen before the end of the year, as the sovereign wealth fund comes out and says they bought Bitcoin or something. But there's not a very clear, hey, this is going to happen. If you go back to this time last year, when the ETF was being rumored to be approved, it was very clear. If this gets approved, this is going to be a catalyst in price. It is worth noting that we are still up about 50% from before the ETF got approved. So we kind of got this repricing. We've gone sideways for the summer. I do expect that there will still be kind of a bull market. I do issue a word of caution, though, that people who are expecting the bull market to be hundreds of percent from here, I think could be quite disappointed. My guess is that we should expect the volatility in each cycle to go down over time. And so it'll still be attractive compared to the S&P. But it shouldn't be, hey, we're going to go from 50,000 to 500,000 or something like that in the bull market.
Anthony believes that dollar debasement is inevitable, and he's urging investors to get ahead of the curve by positioning themselves long. According to him, this is the key to capitalizing on what's coming next in the financial markets. Let's listen to more clips from the video.
There is one thing that every politician in America agrees on. They're going to devalue the dollar. That one data point is the single intelligence test for investors over the next 10 years. If you realize they're going to devalue the currency, you should get long financial assets because all of the financial assets are denominated in dollars. So why do real estate investors always make money? If I buy a piece of real estate and I hold it for some period, especially long-term period, somebody's going to have to show up with more dollars in the future to buy that same piece of property. In a lot of cases, it's not like the land got more valuable or the house, all of a sudden a bunch of things got built around it, etc. It's that the dollar, the thing it's denominated in, is worth less. And so if you look at home prices in America and their average appreciation over the last couple of decades, it mimics about the loss of purchasing power in the dollar. It's kind of a 45-degree angle up and to the right. Look at the stock market, very similarly. It's a 45-degree angle up and to the right at about 8% a year. And so that is the dollar losing purchasing power, which means somebody in the future will buy that same asset from you, just need more dollars because they're cheaper in terms of value. And so that is the argument as to, rather than trying to time markets and do all this stuff, the US stock market is a millionaire minting machine. If you simply keep allocating, and people always say, oh, I don't make enough money. Take an average teacher in America. Let's say, and I don't know exactly what the salary is, but let's say it's $50,000. If you work for 30 years, so you start working when you're 22, you stop when you're 52. You don't even work till you're 62. You just work till you're 52. That means that you would end up making about $1.5 million in your lifetime. And so if you start doing taxes, if you start doing all this expenses, etc., let's say that you can invest $300,000 to $500,000 of that, right? So you're able to invest about a third or less of your actual salary. If you're able to do that and you watch it compound for 30 years at 8 to 10%, you end up in a really good financial position. You're not going to be Jeff Bezos, but you're also not going to be in a dire financial position where you can't retire, etc. And so the reason why that's interesting is if you go and you look, Dave Ramsey did a study years ago. He said, what are the top 5 in occupations that become millionaires? Teachers is one of them. And when you look at that, you say, well, why is it? Have you ever seen a teacher drive a Ferrari? No. They're in an environment where it's not keeping up with the Joneses. Most teachers, right, they drive a Toyota Corolla. They wear kind of, regular clothes. They're not trying to live in a mansion. Like it's something about whether it's a personality, whether it's an environment, whatever, they live within their means. They're able to save a lot of their income. If they invest it, they can end up being in a good position. And so the real, attack maybe on that story is that we have Instagram and people are like, I want to be balling. I need the watch. I need the car. I need the house. And that is really what is preventing people from being able to leverage something like the stock market. Instead, they become consumers, not investors. And so if they could switch that and say, I'm not going to consume all the craziness, I'm instead going to be fanatic about investing, getting exposed to the US stock market, simply buying something like the S&P 500 and letting it compound for years will end up being a really good thing for them.
In other exciting news, Dan Tapiero, the visionary founder, CEO, CIO, and managing partner of One Roundtable Partners and 10T Holdings, is sharing his take on today's market dynamics and the outlook for Bitcoin and crypto. Dan remains incredibly bullish on both Bitcoin and Ethereum, standing firm on his prediction that Bitcoin will hit $100,000 in the coming months. Want to know why he's so confident? Let's dive into more clips from the video and get the full picture.
Every bit of data for the past 2-3 months has more or less slowed down, except for maybe the housing data, which has just picked up a little bit in the US. In Europe has been weak. The Swedish central bank, in fact, just cut rates. The UK is cutting. And most concerningly, I guess, is China. I mean, China's economy has been very soft over the past year, and rates there are back down to 2%. So I start with this picture of where is the macro economy going. I think we're slowing, not a recession or a panic necessarily, but and I think that's going to be, and it has been bullish for gold. Gold just made an all-time high, last week, and I think people in the new world, in the crypto digital world, the world that I'm in, they ignore some of these traditional market prices. But gold making an all-time high is a sign of liquidity coming. And also the dollar, I think, has begun its bear market. The euro yesterday hit 111. That was the highest level in some time. And I think it's going to continue. And so over the next 2, 3, 4 months, as I look out, I'm very bullish on Bitcoin and Ethereum. Those to me are the core assets of the digital asset ecosystem broadly, as I call it. The other cryptocurrencies to me are more venture projects. I think Solana probably is the one cryptocurrency that's maybe moving towards becoming a core asset. But I look at that broad background of the traditional macro, and I think it's very supportive for core crypto. But if you look beyond just the core assets, you see that the level of usage and interaction with blockchains has really exploded in the last 6 months. Part of that is attributable to the ETH and Bitcoin ETFs that have brought new people into the ecosystem. Part of it is a result of Coinbase's L2 base, which has onboarded a lot of people into DeFi. You have new things like DPEN and RWAs, which are small but are taking off. And of course, the stablecoin business has been extremely strong. Bitcoin has massively outperformed gold over any time period, reasonable long-term time period. But I mean, look, as our funds are 10-year life funds. I'm a long-term investor. The difference between Bitcoin at 70,000 is nothing. Like for me, essentially, Bitcoin is at the all-time high. Whether it's 10 or 15% lower or higher, it's still, I think we'll be, over the next 6 months, I think we'll be over 100,000 in Bitcoin and probably over around 5,000 in ETH as well. I mean, I think there's a big bull rush coming. And look, sometimes gold is maybe a little ahead, sometimes it's behind. I think because Bitcoin is, broadly speaking, more of an emerging asset, at least versus gold, which is 5,000 years old, it tends to be more, there's more gamma there. It moves more quickly. And I think the upside, of course, in Bitcoin and ETH is much greater, but both are a reflection of global liquidity trends. And so when liquidity is plentiful, which I think the markets are beginning to sense that it's going to become, these liquidity assets move. What I would say more importantly is that with or without, or regardless as to where the short interest rate is, the Federal Reserve short interest rate, the activity in the on-chain world is up at least over 100% in the last 6 months. And that's with rates having stayed to the same place. And I keep saying to people, look, when the interest rate was zero, Bitcoin was around 65,000, the peak in 21. Rates went to 5%, they're still there, and Bitcoin is now at the same price. When that short rate goes from 5 down to 2.5 or 3, Bitcoin should easily double just on that. Forget about all of the myriad wonderful developments going on chain and in this space, all the innovation. Forget about all of that. If you just look at that one measure, I think there's cause for being super bullish.
That's a wrap for today's video. What are your thoughts on the market and the DOJ's shocking subpoena to NVIDIA? We'd love to hear your take on Anthony and Dan's bold outlook for Bitcoin and the stock market. Share your comments and insights below. And don't forget, if you enjoyed this video, give it a thumbs up, share it to help us reach more viewers, and subscribe for more content like this. Thanks for watching.